Iran's Islamic Revolutionary Guard Corps has threatened to set fire to any ships that try to pass through the Strait of Hormuz. Brigadier General Ebrahim Jabari, advisor to the commander of the Revolutionary Guard, says it will not allow the U.S. access to any oil. Listen.
The price of oil's reached $81 and the world's certainly waiting for it to reach at least $200. The Strait of Hormuz is closed. Our heroes in the Islamic Revolutionary Guard Corps, Navy and the Army will set fire to any ships that try to pass through the strait. We'll also target their oil pipelines in the region, and we will not allow oil exports from this region until we put pressure on the enemy. The Americans have debts of hundreds of thousands of billions of dollars, and they're thirsty for the region's oil. They'll not get a single drop.
Well, as a result of all that turmoil around the Strait of Hormuz, stock markets in Europe are falling for a second day following declines in Asia. South Korea's benchmark KOSPI index tumbled by as much as 6.4%. That briefly prompted regulators to halt trading by triggering a mechanism intended to prevent major market swings. European gas prices jumped more than 20% to the highest levels in 3 years. That's after Qatar state-owned energy firm halted liquefied natural gas production on Monday, citing Iranian missile attacks on its facilities. All right, let's go now to Katrina Yu, who's standing by for us in Beijing, and we also have Jack Barton for us in Seoul. So first to you, Jack, tell us how the markets have been responding since the opening today.
Selling off again right across Asia with falls in most stocks. Here in South Korea, it was, of course, the worst. It was a holiday yesterday, so in many ways the KOSPI playing at catch-up at a massive fall, more than 7% by the end of the day. And as you mentioned before, at one point, there was an automatic circuit breaker brought in there after it hit 5% for more than a minute. But even after that temporary suspension was lifted, the shares just kept going down. Carriers very hard hit. Korean Air's a 10% drop in share price, but we see energy providing companies, but even the big tech companies, Samsung Electronics, almost 10% fall. SK Hynix, more than 11%. They're the two big chip makers. Kia Motors also falling more than 11%. So these are huge losses. And while we saw defense companies falling across most of Asia here, Hanwha, the really big defense company, almost raised 20% in value. So a big gain there. But all of this because of what is happening in the Middle East, and particularly two elements today. US President Donald Trump's announcement that this could go on 4 to 6 weeks. So really implying there is no end game, and this could just drag on. But also Iran officially closing the Strait of Hormuz, and this region so dependent on oil and gas coming through that strait. So more market turbulence expected. The South Korean government has put together an enormous fund that it can use in an emergency if the market keeps falling, but no one here doubting, talking to all the analysts here, this is going to have an impact one way or the other on the economy, on GDP, on central bank decision making, and of course on inflation.
Yeah, it seems like the markets are certainly expecting more war and higher fuel prices. Okay, Katrina, over to you in Beijing. What has been the impact felt thus far in Beijing and in China more broadly?
It's definitely a vulnerability for China. I think for some Chinese officials, the closing of the Strait of Hormuz is one of their worst fears coming true. I think it's been something that China has been trying to prepare for decades by minimizing its energy needs that come through that strait, but still, it's quite substantial. 40 to 50% of all China's oil imports flow through the strait, and 25 to 30% of its liquefied natural gas, much of that from Qatar, also comes through the strait. So China is quite vulnerable there. Now, when it comes to oil, 13% of its oil imports are from Iran, and that oil is quite advantageous to China for two reasons. Firstly, it gets it at a deal because that's sanctioned oil. And secondly, China transacts, Iran buys that oil in renminbi, in Chinese currency. So losing access to that is definitely a blow to China. Now, the China's foreign ministry gave a comment just a few hours ago saying it's doing what it can to secure its energy needs. It's calling on all parties to try to ensure that shipments can continue to flow through the Strait of Hormuz. And we we have also now read reports that Chinese officials have been working behind the scenes to try to use their influence with Tehran to pressure Iranian officials to allow shipments, particularly of oil and Qatari LNG, to continue to flow through the Strait of Hormuz.
So, Katrina, I wonder, China is a long way away from what's happening in Iran, but I wonder if it has any levers to pull to try to assert at least some level of control over the situation.
I think China certainly has influence over Tehran. It's one of the few major economies that has a good relationship. It says it's a friendship, a working relationship, a strong trading relationship with Tehran. It's the biggest buyer of Iranian oil, buying between 80% of all Iranian oil exports. So certainly it can be said that Iran would not want to do anything to anger Beijing, to antagonize Beijing. But I think it's also been made clear, while China can provide support to Iran politically, it's been condemning the US, condemning Israel for its actions, calling for a halt, to return to the negotiating table. There are limits to what China can do to help Iran. So far, China has denied providing any military support to Iran, sending any weaponry. So I think Iran is also aware that while it's a friend of China, there's only so much it can get from China as well.
Jack, it is hard to understate the impact that closing the Strait of Hormuz is having on Asia. 70% of oil that goes through that strait, goes to Asia. So if Asia cannot rely on the Middle East for its energy needs, where does it go next?
Yeah, there are some countries here in Asia that are particularly hard hit. About 90% of Japan's oil comes through the strait, just over 70% of South Korea's oil comes from through the strait, including more than 20% of its gas. These countries are not rich in resources in terms of, they're very rich in terms of industry and exports, but they need a lot of fuel to power that industry, to power transport, to get those exports out. And this is why we're seeing big movements in the stock market, particularly in South Korea and Japan. Now, the government, the Ministry of the Economy and Finance has had a meeting. It has announced publicly that they are trying to diversify over the coming months the imports of oil and gas. But at the same time, they're saying they do have large stockpiles. We know the government has about 100 million barrels, the private sector about 95 million. They hope this can go for about 200 days. Japan also, they're saying they have stockpiles that could last up to about 250 days. But of course, they don't want to dig into those. They need those to stabilize the prices. But they hope there can be a resolution before that happens, because it will be extremely difficult to diversify, because everybody's doing it at the moment. It's not just the countries in East Asia, but of course across Southeast Asia, where they're not quite as dependent, they will still be trying to diversify at the same time.
All right, Jack, Katrina, thank you both.